This is not financial advice. I am not a financial advisor. Before taking any action based on the information provided on this channel, it is recommended that you seek the advice of a professional licensed financial advisor.
Let's do this.
Welcome back to TAQ Capital, where I do technical analysis quickly, and I like to focus on that quickly part, so we're going to jump right into the charts. This is the daily chart for Bitcoin, and you can see that we've been trying to break this green line for, well, quite some time, back to the beginning of June. And up here, we didn't even quite hit it before we started to come back down, because again, like I've been saying, it's losing steam and is eventually going to come down. Turning on the Ichimoku cloud on the daily, you can see that, we've got a decent sized break here, just like we had back here, just like we had back here when it pulled those down, and definitely bigger than we had here when it pulled this down. This is a different story because it was already in a crash, bringing the red and the green line together. So that's a little different, but we're dealing with a similar gap here that we've had this entire time. So presumably, one could assume here that this gap remains this size and continues. We'll just keep coming down and bouncing off the Tenkan line, the green line. But that doesn't happen indefinitely. It just doesn't. The fact that it's happened this long has honestly shocked me. When it came down this time, I thought that was it. I thought that was going to be the breakdown. It did this little pop up, and then I was like, okay, maybe it's death throes, and it's then going to come down. But it's managed to come all the way back up for a third run, which is quite impressive. But I noticed this too. When you take the Fibonacci retracement tool and you come up to its first run, you can see that there's this line here, now marked by a purple dashed line. And you can see, or what this Fibonacci retracement tool tells us, is that once this thing hit here, it would come down and retrace. These are three prominent levels that it often retraces to. This one on this first run up is all but a guarantee. It could often it'll come down and split the difference right around in here, which you can see it got close to, but it didn't quite make it all the way down. So once it did the retracement, the next level for it to hit is this one. And this happens frequently. What doesn't happen is this, and this to get there. That does not happen. Usually you'll have it'll come down like this and then shoot back up, maybe like some of this stuff before it hits, and then comes down, will bounce off the wedge, and then break out. But in this case, that was not it. So this has been quite a remarkable move just in general, and a lot of that can be the news that's going on, and with the job numbers that came out and all the stuff that the Fed's doing and interest rates and all that jazz. It could be market psychology. People were, a lot of people are talking about the fact that this was the bottom, and now we're just taking off to the moon. Again, I'm not of that school of thought. I don't think we've come back far enough yet. But I did notice that we have now hit that point up here. So we've crossed this purple line, and now I think that's signaling we're done. We technically hit the purple line back here, which is why I was like, okay, this is coming down. But no, now this is another attempt. We've blown over it, and now I don't think it can have any more steam, and it has to come down. Okay, now this is the daily chart with Fibonacci channels that I've drawn. And you can see here that we came up, once we broke through this line, we had a little more steam in us, and then we came crashing down. Then we started this run up here, and we've tried to break this Fibonacci line, tried to break it again, tried to break it again, and I've tried to break it again. And so this is our fourth failed attempt. Now it's not completed yet, obviously, because this is a daily candle, but this is signaling that it's likely to fall. And what these Fibonacci lines do, they're essentially resistance and support. Once it crosses it, this would act as support. And you can see here that we came up to the line, was rejected, didn't even make an attempt here, and we came all the way down to here before we tried again, rejected, and then we were rejected here, managed to break through, and as we came crashing down, boom, same line is now support. We made it all the way up, rejected, came down, and this line here is not a Fibonacci. That's just the channel we formed. So we came down and then went back up and blew right through the Fibonacci this time. Came down, didn't even challenge the line here, and went back up, and now it's rejected, 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 rejected. So we could see a crash come down all the way down and break finally outside of this yellow wedge. It's also possible, of course, that we could just keep challenging this and kind of do one of these numbers that we did back here, shoot way down, and then break up and make it to the next one. Again, I don't see that happening. Even if we come down and we hit this yellow line, I think we'll do a bounce at best. Maybe that bounce will be a little bit higher, and then we'll come down. And last but not least today, we have the hash ribbon. This is a buy indicator that is triggered, which we can see going all the way back to 2019 here. And you can see that when the buy indicator was triggered here, we had a run up. Buy indicator was triggered here, we had a run up. Now it wasn't triggered back here, but it was triggered. We had a run up. Then we had the buy indicator triggered here, and it began this massive run up. We had a buy indicator triggered here, which you can see is part of this pullback. And then we had another run up. The buy indicator is triggered here, another run up. And now people are talking about how this is brewing. But what I think people aren't looking at is the fact that the time between this and this can be substantial. If we take our measuring tool and we go from the very beginning of the green dot to the center of the blue, which you can also see is right where this transitions from the red to the green, that's 116 bars. And right now, we're on the daily chart, so 116 days. If we compare that to what's going on over here, and we start again at the beginning and go in 116 days, whoops, we're looking at September 22nd. So that's quite some time out. Now, we can look at some of the shorter time frames to see, but if you look at the shorter time frames, you don't have the green totally separated. This is the only one where the green is way over here, and then there's more space on the side before you hit a blue. You don't have it here at all. You don't have it here at all. So if we're comparing apples to apples, this one is going to be more like this one than any of them. So I think we're in for some, more downturn before we have the breakout that could happen, I guess, is, if it's mimicking this exactly, which I really don't think it is, even just based on what that looks like now. We're talking September 22nd. So there's a lot of time between now and then, more than a month, for there to be some serious downtime. So I think this is premature celebrations that everyone's on about. But like I said, while I'm bearish in the short term or mid to short term, I am not bearish on Bitcoin. I think that once we bottom out by the end of the year here, we're going to be off to a massive run beginning of next year. But that's all I've got for you guys today. If anything else happens, I would expect more consolidation, a little bit more of a retreat down into these areas here. It's distinctly possible we could even come all the way down to the Kijun. I don't know that the massive break is going to start today. It's moving pretty slowly, and it is continuing to challenge the line here. So there's no telling, how long it's going to work on that. This could be, though, the beginning of the major rejection where it just falls, and then that's where you might see more of this before either an attempt to re-break this line or finally breaking out of the yellow wedge. So I'll keep you posted as things unfold today. You can follow me on Twitter, Instagram, TikTok, which I haven't been nearly as active on as I probably should be. But I think the videos turn out best on TikTok when I'm doing them from a mobile phone going about my day. But I still do post to YouTube, and a lot of the short updates I end up throwing up on Instagram. So check those out and subscribe to me below. Thanks, guys, for watching, and I'll catch you in the next video.